Good morning, ladies and gentlemen. Happy Friday to you all. Hope you're having a wonderful end to your week. And boy, do we got a lineup today. Thank you, Tony, for providing all or majority of these companies on this list. As you do always, you were a savage OG, so thank you very much. Without further ado, guys, let's get into the video. And we're going to start off with SNBR. And today, guys, got a little special thing where I'm actually reviewing these companies during the market, actually. And normally I do the videos closer to aftermarket close. We're actually doing it towards the end of the day at 3:30 roughly on Thursday. So this is going to be an interesting one just to see how the price action is closing for some of these companies. So starting off with Sleep Number Corporation, I can't make this any simpler than it is. It's bearish until you basically break this dominant downtrend that you have formed here. Now, you could go sideways and actually break this dominant downtrend. The MACD is trying to converge and diverge from one another, and I definitely do see a divergence on the MACD as clear as day, where price has made a low here on the MACD, and you're higher than you are now. Now, that's not to say that you can't come bash your head against this dominant downtrend and head down lower to sub 10s. But until you really find a break, similar to how I covered this with Rivian, I covered this with Neo, you want to wait for these companies to break this dominant downtrend and not just literally fake you out. Like, you want to see a couple candles close, go sideways, form consolidation, and that's really going to give you an indication of where this is actually going to stop bearing you underneath. Would I be shorting a company like this? Well, no, just because you've fallen already so much. It's just not worth that short squeeze occurring and basically screwing your trade up. To me, it's one of those wait for the bottom, go sideways, maybe do the quick bounce or play the bullish bounces because they are pretty significant when they occur. Now, with Sleep Number basically on the week, that's going to be our big pick tell sign. And the first thing that I go to is this $12.50 weekly demand zone that is sitting here. So we're definitely going to probably head down there. It is my opinion. That will be the strong sentiment. The MACD is diverged from one another on the weekly, and you're just making weekly lower lows. Now, if we close Friday above the previous week's low, which would be above 1791, which you are above it basically now, but by a slim margin. You're above it by about 30 cents. So, caution with this one. I want to see sideways. I want to see that downtrend broken before I say, hey, let's go all in bullish on this company. Now, the RSI has room to run to the downside. Oscillation really hasn't bottomed theoretically. So until we get that stop going down, go sideways, break at least into the $23.94, then I wouldn't be looking long-term investment. You also have earnings coming up back in July, so that's going to be a pretty telltale sign. So you could break this downtrend sideways and then have run into earnings and completely fall off a cliff. So some things to be cautious about. Would I be buying this company now? Would I keep it on the back of my mind? Yeah, this is an interesting swing up when it goes up, but you are, for the bulls out there, you are in a descending wedge that basically comes together per se at the beginning of July, 4th of July week. So this company can break down, or it can pull something similar to like a Credit Suisse that just broke it completely down. So just be cautious with that one and just, play it when it breaks. Don't try to be the Superman, like they say, and try to top tick or bottom tick the market. Just play the trend. Right now, trend is lower. If you're not into shorting, don't short the company. I personally, even if you are into shorting, I wouldn't short this company just because that volume rip up could be pretty massive. And now for a bottoming perspective, I don't see a lot of volume capitulation here yet. So that's why I'm saying I think we have more room to the downside. That $12.50 would be a prime juicy target to come down to. But then again, I could be wrong about that. Just let the chart play out on this one. And that's pretty much what I got for you guys on this one. And then we're going to jump over to AAP. And I knew Tony was going to recommend this one because Advanced Auto Parts. So I was going to do a video on this one, but I decided to do it on the video. But this company just had an absolute landslide on earnings. This is just carnage. This is just pure and absolute carnage, down almost 37% from 2 days ago. Super oversold, divergence on the RSI. Would I be trying to buy this? An absolute equivocal no. You want to buy an FRC? Go right ahead. That's what you're probably buying. You are most likely going to get a dead cat bounce. Does that mean that the same people that were thinking the dead cat bounce happened yesterday and it's going to happen into today? Just no. We got some news today that I saw Bank of America basically saying they're ending their long-term position on this company. And I'm going to go to the weekly just to see what we got going on there. So this is a little fascinating because the low back here, which would be a double bottom, is $66.63. Yes, I know the devil's number in there, but your low of the day for this company is basically $67.80. So you're about $1 away from basically forming what could be considered a triple bottom, just because 1, 2, 3. You break that, there's not a lot of support until you get down into the $47.09, or then even come down to this price action area of about 42. So the 40s is where you're going if you break $66.63. Now, would I be trying to catch a falling knife with volume that's happening here? Because this move is on massive volume, guys. And just because the stock hasn't closed today, you haven't seen the closing volume, it could definitely slide into after hours. So to me, based on the price action zone that it's telling me that it's going to slide further, I would not be looking to buy this company in any way, shape, or form. The easiest way to play this, honestly, is to wait for that bullish reaction up to the upside and try to fill this gap all the way from $81 up to the 108. Now, if that comes a year from now, it comes from a year from now. If it comes for 2-3 years down the road, it may not come at all. We've seen companies go left and right. We've seen companies go back. BK. Now, this company does pay a dividend. I don't know what the dividend yield is. That's Fatal's area of expertise, and I'm sure he's probably going to cover it soon. But just overall, this is a falling knife. They basically reported really, really crappy earnings based off it, and it's just, I don't see things going very well. And earnings here basically was not reported in TradeView, so I can't really tell you guys, but I just saw a lot of news on this company that's basically bearish earnings. Now, massive gap on volume capitulation. It's just, do you buy stuff on Advanced Auto Parts, or you just go to eBay or Amazon to buy stuff for cars? Like, just throw that in the comment section below, guys. I want to see what you kind of do. Just, side topic, but don't catch a falling knife, please. This company is looking like it wants to break the lows, and it's just pretty bearish overall. The movement of the price action is pretty bearish. I'd be looking at that. If you want to play the catch the falling knife, maybe put an order in at $66.64 with a stop loss at $66. Therefore, you lose maybe on that 64 cents per share. That's not a huge haircut. You're looking at what would it be, 1.5%, 2% maybe on the small position that you guys would play. But that's what I would maybe play, the hey, risk on, risk off type mentality. But to me, it's basically look for that gap fill. That gap fill is it's 30%, so that's an easier play to do, and it just be on better terms. The monthly, as you can see here, you are in a monthly Lux Algo zone. So I've never actually seen a company bash its head into a monthly reversal zone. So it is going to be very fascinating what actually occurs. If this is a triple bottom, it would be very bullish. Now, you had this astronomical rise, and you could be technically then forming a massive head and shoulders if you recover, but we got to see how that all plays out. Now, would I be investing in a brick and mortar store? Not necessarily, but then again, to each their own. Right now, you haven't broken the low here, so until that happens, you can have the perception of bullishness. But if you don't, then, well, this is maybe one of those you put on the shelf and kind of forget about until that gap fill occurs. Throw an alert on the chart just to see if you're going to get that bullish or bearish reaction. So just a quick recap, guys, for the company. If you break $66.63, it's basically all hell is going to break loose, and you can just play the gap fill for the bullishness if you want to have that Advanced Auto Parts play to the upside. Next, we're going to go into CIO. So looking at City Office REIT. So this is a REIT that I'm guessing has to do with commercial real estate just because of kind of the name implies. But then again, I know nothing about this company, guys. I'm just telling you what I see on the chart. Similar to the SNRB situation, we have a dominant downtrend basically that is kind of breaking right now. So we have to see how it plays out. We're breaking the dominant downtrend. see if we go sideways for a little bit and see what the stock does. Right now, you basically are forming a divergence on the MACD here on the daily, which are making lower prices, higher MACD, but it can't curl back down and make a new lower low just because the MACD is pretty separated from one another and has the ability to curl back down to that divergence. That's where I'd be playing the bullish setup in the company. I would like to see another leg down, maybe into the 345. But again, I don't like trading companies that have such a low dollar evaluation. It just one of those things that you have too much going on. Now, one of the bullish things I see on this company is that you had a volume capitulation style volume coming in here. Even though it's bearish volume, it's still high volume, showing maybe an indication of bottoming. Now, if we look at the weekly, as you can see here, the company has basically had a massive bearish run. So it's just, we have to keep an eye on that. So until we see basically a recovery or the stopping of that downwards lows, then I wouldn't be necessarily playing bullish, but it is maybe a company that soon could form a bullish setup. But as of right now, it's one of those I kind of would stay away from. Now, they do pay a dividend, but then again, it is a very low evaluated company. So you just have to be a little careful of how much exposure you want, especially with the real estate market and commercial real estate. I do think, not in the residential sector, but the commercial real estate, there is a shoe to drop, and I wouldn't necessarily be in it. But then again, do your due diligence, read up on the company. I'm painting with a very wide brush stroke, guys, so just be careful and take what I say with a 10 trucks of salt. So just be careful on that. So just do your due diligence about REITs. They have certain things in them that make them a little more complicated to trade. For me, it's looking constructive, but not there yet. That's what I can basically give you. And basically the push up is going to be basically you're targeting the $6.50 to $7 is where I'd be targeting my basically stop out point. But other than that, it's looking like interesting. I'll put it like that. So the next one we're going to go into is WRK. So taking a look at WRK, West Rock Company, we can see here we did have a bullish exit signal actually come up after having a buying signal here. So the MACD is trying to roll over. So we're probably coming down to take out these lows here at $26.85 and heading lower. I think the weekly view is going to give us a pretty good indication of where we could be possibly going. And you have a massive price action zone going back to the COVID lows at the $25 mark. So definitely be looking at a target of $25 there. You should get a significant bounce. However, I would be cautious once we got down there that this MACD doesn't just completely cross on you and it just becomes very, very bearish at that point. So we just have to keep an eye on that. Now, if you come back down to the $25, you'll be in the daily or reversal zone. So it's definitely going to give you a interesting buying opportunity then. I don't think it's there yet. Now, if swing back up, you're probably going to create a price action zone at this $28.59 mark. And then secondary target would be the $30.72 mark. That's would be my take on it. But for now, it has a very bearish overall pattern, especially on the weekly. As you can see here, is just straight lower high, lower high, lower high. And just the pattern's continuing. Until that pattern breaks, guys, I can't support any bullish confirmation on this stock. And if you break the COVID low, you may be coming back down to $19.86, which would be a roughly triple bottom around, or localized equivalent triple bottom around this area of $20 to $21. So you could be picking up something down there, especially if the MACD crosses. That's maybe where you bottom. You take out the COVID low, then it's probably lights out for this company in general. But then again, you have to see how it plays out. That could take months or not even years to necessarily play out. But right now, it would not be my recommendation to buy this company. Basically, sit on your hands and wait. Next, we're going to go into 3M. So this is going to be pretty shocking when we're coming 3M, that a company this absolutely massive is going to have this pattern on the chart. And what is that pattern? Basically a dominant downtrend. You're basically trending downwards on the company and you really haven't had any relief. So you do have a possibility of a debt cap bounce here, or you could have a continuation down into the 90s from this point. I do think it'll be a bouncy slide down for 3M, just because there's always going to be people trying to I'm not going to say bottom fish the company, but basically try to get in at a good deal, but then the dip gets dipper, as they proverbially call it. And the whole stock market breadth has been very, very, very poor. If you guys don't mind, stay tuned to the end of the video. I'm actually going to cover and give you a quick overview of the S&P 500 and the stock breadth, that what I'm talking about, so you guys can get an insight to that as well. And you can also skip to it. I'll have a timestamp down below. But overall, we're covering 3M back when we were in these areas of the COVID low on the weekly. Me and Veiwer were covering it when they had their earnings. So I was saying, hey, you could definitely get a bounce here, but if you break that $100 mark, then it's probably going to be a nice big waterfall down. So with this company right here, you did form a zone at that $103 area, and the MACD on the weekly really is looking like it wants to roll over and head lower. Now, you most likely are going to form a MACD divergence on the weekly, but then again, I use natural gas, and I'm sorry for those that are about natural gas around the time I got out with my skin still intact, but that has had a MACD divergence for forever. That has never played out. So again, don't rely on a single signal to buy or sell. You want to have a variety of signals. So basically, as we can see here, that we're just making lower lows on the weekly, and we don't have a lot of price structure. And sad to say, all the way back to the 2011-2012 era, where 3M was $67, where it went on this massive rampage, there is little to no price structure down here. So this company, in my opinion, the bottom would be $68. And I know that's a very bold statement to make, and I would be a little more conservative, let's say 80. So that's where I'd be looking to buy the company. Right now, it is just a absolute monstrous tank on the way down, dragging you to the wrenching abyss. So MACD is going to probably cross bearish on the weekly. The daily is not showing any price structure that I would say is bullish, and we're probably heading lower. Again, this is the trend of this viewer requested ticker Friday today, is you need to break the bearish downtrend before you go bullish. We're covering a couple companies today that had that trend. So again, guys, be very careful of trading companies that have a downtrend. Stop trying to be the Superman. Trade the trend. The trend is down, you trade that way. If not, or if you're an investor, let's say, don't buy companies that are downtrending. It just has a very poor win to loss ratio in history speaking. But if you get a bounce on 3M from, let's say, today, maybe targeting the $97 area, that's where I'd be looking. But again, it's super hard to predict when this company is basically going to catch the loop-de-loop to the upside, which I do think it is. I don't think this is a company that's going to BK. But again, it's one of these things that the trend is your friend till the end, and basically the trend is downward. So play it that way. Take advantage of those lower prices. If you want to build, like, let's say 100 share position in this company, maybe dollar cost averaging every single month on the way down wouldn't necessarily be a horrible thing. If you're looking for that decade or 2 or 3 decade outlook, the company is definitely going to have larger appreciation as inflation goes up in time. But then again, I can't give you financial advice. You guys got to make your own decision on it. It's just some thoughts that I'm throwing out there as an interesting opportunity just to see how time goes on to build a position in it. Next, we're going to go over DOX. So taking a look at Amadeus Limited, or DOX, we can clearly see on the daily here that it's basically forming a consolidation or a pullback and possibly setting up a bullish run. Now, some of the bearish things on the chart is that you do have this long wicking hanging man candle showing signs of basically a seller conviction and lack of buyer conviction. So we could get a more pullback, especially with the MACD crossing and the zero line and the RSI basically crossing over today on the close. And as you can see here, that it's just showing more bearish signs per se, which if it pulls back to this trend support, looking at $93.10, but I don't like how you have a big gap here at the previous earnings push of $92.25 to about the $91.28. So that gap could possibly get filled. And again, if it comes back through this price action, it is going to fill it rather quickly. Jumping over to the weekly, just seeing what it's telling us. And you kind of have a bullish cross on the weekly, but then again, you are maybe forming what could be as like a triple top here. And it's just, I'm torn between bullish and bearish. So for the company, if you start breaking this localized low right here, then I'd be saying I'm probably looking for that gap fill. If I get a little bit more of a pullback, MACD starts curling back towards one another, then I'd be looking for that push up. Now, where could that push up go? Well, if you break this sideways consolidation, then I'd be looking at least to the $100 point. That'd be the psychological barrier, as I call it. $100 triple digit price tag for the company is definitely going to be where people take profits, along with a coinciding reversal zone, and the MACD could form a divergence there. So that's where I'd be looking to take profits, buying in again that area of the gap fill, possibly all the way down at $88.62, or even dollar cost averaging from the gap fill of $90.96 all the way down to $88.80. Just food for thought there, guys. But this is one of those you kind of have to pay attention to and kind of make your own decision of where your risk tolerance is and make sure you have a plan. But I do see the bull and the bear case here, but I see a bullish case to buy down here, and I see a bullish case to buy here. So overall, it is a very healthy trending stock. You are trending upwards, as you can see here. Even with the previous 2022 market, it really didn't trade like the S&P 500, and you definitely have a long-term uptrend forming here. So if you come back down to that uptrend, which would probably be located somewhere in this gap fill, that may be your bouncing point. So just keep an eye on that and see where it takes you from there and how the stock is trading. And next, we're going to go to our final company, FL. So another one of these crazy selling off companies is Foot Locker. And Foot Locker is actually maybe approaching a point where you may want to actually consider buying it. This is almost 39% volume on the daily. MACD is trying to curl towards one another along with RSI. So if you get down into this $23.69 area, or even basically starting at where you are now, it may not be as an outrageous buy as one may think. They do pay a dividend, so again, it would be an interesting point to basically get in. The risk to reward, in my opinion, is skewed to the upside. With Foot Locker coming back down to this level here, it is basically where you had to push off of the June low in the market and everything. So it is an area where there was a high volume push, and you starting to see that volume capitulation ramp down, and usually these things ramp back up with volume to push you out of that region, and you're starting to see maybe a slowing of selling pressure on the daily. Now, that's not to say that if you get in near this point that you could per se take the short-term scalp and then maybe re-enter later, but it wouldn't honestly be as bad of an idea at the $24 mark versus trying to catch this falling knife here. You're starting to see a cooling in the price. So it is honestly one of those things that you could possibly be considering at this point. Now, the weekly supports that as well, where you see here the $23.96 or 69 cents, sorry, would be an area where I'd be looking to get in, especially because it would be a equilibrium on the MACD forming. So it really, to be bullish on the company, this is where you want to be bullish. This ramp right here is basically washed out. You have strong movement down. Usually strong movements down do have some bounce back. It's just the nature of the market, where people look, a company that's fallen this far has maybe some price appreciation, and you got a reversal zone supporting you down here. Now, if you break that, you're probably looking at $12.90 as the next buying point, which would surpass the COVID lows, and basically any price structure below the, let's say, $22 mark, that's where I'd be looking to get out of Dodge, wait till that $19 or $14, wait till the $12, $11, $13. That's where I'd be looking for the time there. So again, just be cautious about getting in, but it is an interesting play if you're playing the more risky trade. Putting a small position on this company wouldn't honestly be a bad idea, and this running it up and just seeing how far it can go. If you get back to this gap fill, that'd be an amazing, maybe take 50% of the gap. It just would be an amazing play, and the MACD and RSI are supporting you in a bullish. Even if you take the short-term scalp, that would be an interesting play on the company. And guys, last but not least, as promised, I was going to do a quick market review for you guys covering the S&P 500. And you can clearly see here that we're basically in this range bound area. We did pierce above our last week's range, but now are basically failing to hold it. basically we could be creating a double top equilibrium with the previous week, and especially with the NASDAQ. NASDAQ may be trying to do the same thing here. You still got maybe a little more room to go, but the problem that I see here with the S&P 500 and the NASDAQ is you have dominant red volume. You have dominant red volume with a lack of green volume. So it's more of a lack of sellers versus a abundance of buyers, especially here, as you can see that you are maybe starting to curl back down, forming a divergence or an equilibrium high on the RSI, on the S&P, and you definitely could possibly get a sell-off with those ADP non-farm payrolls tomorrow, just because I do think they're a little overstretched on the bullish case. But then again, market could run and choose to run like it did today. It saw bad news and said, no, I'm just going to keep running. And especially with tech, the tech AI mania is going strong. Now, the MACD and RSI are starting to get weak at this point, and you could be forming a double topping pattern in the NASDAQ as well. Apple coming up to all-time highs and actually almost within $1 of its all-time high on the weekly, and the day, the all-time high for Apple is about $181.40. So again, just keep an eye on that and see wherever Apple goes, the market goes. So with that, guys, I'm going to conclude today's video. I hope you enjoyed it. Like, comment, subscribe down below. We do take viewer requested tickers, so throw it down in the comment section below of what you guys want covered. And I hope to see you for the weekend deep dive tomorrow.